Have you ever noticed that a lot of us who grew up in households where our parents were born and raised outside of the US heard the exact same thing growing up? Never get a credit card. If you use a credit card, you'll end up in debt. For the longest time, I genuinely believed credit cards were evil. I thought they were just a trap designed to make people broke. But as I got older and started learning more about personal finance, I realized something important. Credit cards themselves aren't bad. Using them incorrectly is. And I think a lot of our parents were speaking from personal experience, not because they wanted to give us bad advice, but because they were sharing what they knew. I personally grew up in an Asian household where my parents weren't very financially literate. They worked incredibly hard, made sacrifices for our family, and taught me the importance of saving money. Those lessons are still valuable today. But when it came to credit cards, investing, credit scores, and honestly how the financial system actually works, they didn't really have that education. Their advice came from their own experiences. They saw friends fall into debt, they had a bad experience with credit cards themselves, they were charged high interest because they carried a balance. So, from their perspective, the safest advice was simply don't use credit cards. And I understand why. If every time you touched a stove you got burned, you'd probably tell your kids never to touch a stove either. But the reality isn't that stoves are dangerous, it's that they have to be used correctly. Credit cards are the same way. A credit card is just a financial tool. It's no different than a kitchen knife. A knife can help you cook dinner, or it can hurt you if you misuse it. The tool isn't good or bad. How you use it determines the outcome. When you use a debit card, you're spending money directly from your bank account. But when you use a credit card, you're borrowing money temporarily and then paying it back. Here's the important part. If you pay your statement balance in full every month before the due date, you generally don't pay interest on those purchases. That means you're essentially using the bank's money for a short period while building your credit history. That's the part no one explained to me growing up. I thought having a credit card automatically meant paying interest, that you'd pay more than what you actually spent. That's simply not how it works if you pay your balance in full every month. That's where the difference is, though. Though credit cards and debit cards aren't the same, treating a credit card as a debit card as if it was the money you already had and not spending more than you actually have is the best way to use a credit card. But why does building credit even matter? Well, whether we like it or not, our credit history affects many major financial decisions in our life. Let's say one day you want to buy your first house. Most people aren't paying cash. They're getting a mortgage. Before approving that mortgage, lenders want to know one thing. Can we trust this person to borrow money and pay it back? Your credit history helps answer that question. The same thing applies if you're buying a car and need an auto loan, or sometimes even when you're renting an apartment. In some cases, employers, landlords, or insurance companies may also review aspects of your credit history, depending on the situation and local laws. Having good credit can make those processes easier. If you've never built any credit at all, it doesn't necessarily mean you're irresponsible. It just means there's less information available about how you've managed money. That's why many people start building credit years before they actually need it. A credit score isn't about showing how rich you are. It's about demonstrating a history of managing credit responsibly. Another thing my parents used to say was, if you can't afford it, don't buy it. And that's where I bring back the point of treating credit cards like debit cards. That's one of the best financial lessons they taught me. Only put purchases on a credit card that you could already pay for with the money in your bank account. Groceries, gas, phone bill, streaming subscriptions, things you were going to buy anyways. Then, when the statement arrives, pay the full balance, not the minimum payment, the full balance, every single month. That's the key. If you're only making minimum payments while carrying a balance month after month, interest charges can add up quickly, and that's where credit cards become expensive. That's also where many people get into trouble. The credit card didn't create the problem, overspending and carrying debt did. Another benefit people don't talk about enough is security. If someone steals your debit card information, the money comes directly out of your checking account. That can create immediate problems while you're waiting for fraudulent charges to be resolved. With a credit card, fraudulent charges are typically handled differently because they're made on the credit account rather than directly from your bank balance. Consumer protections vary by issuer and jurisdiction, but credit cards offer strong fraud protection. Many credit cards also include additional benefits like cashback, purchase protection, extended warranties, rental car coverage, or travel-related perks. The specific benefits depend on the card, so it's worth reading the terms before assuming they're included. Of course, rewards should never be a reason to overspend. Spending $100 to earn $2 back isn't saving money if you didn't need to spend the $100 in the first place. The rewards are just a bonus for purchases you already planned to make. I think one of the biggest differences between our parents' generation and ours is access to financial education. Back then, information wasn't always easy to find. Today, we have books, podcasts, YouTube videos, online courses, financial educators, and countless resources available. That doesn't mean every piece of advice online is good. Dear God, no. But it does mean we have more opportunities to learn how the system works instead of simply avoiding it. I don't blame my parents for what they taught me. They gave advice based on what they knew and what they experienced. They wanted to protect me, and I'm grateful for that. But protecting someone and preparing someone aren't always the same thing. Sometimes avoiding a financial tool entirely can leave you unprepared for how the financial system actually works later in life. So instead of saying credit cards are bad, I think a better message is learn how to use credit cards responsibly. There's a huge difference. If you're buying things you can't afford, if you're paying only the minimum payment, then yes, credit cards can absolutely become a problem. But if you're treating your credit card like a debit card, spending only what you already have, paying the statement balance in full every month, and using it to build positive payment history, then it can be one of the most useful financial tools available. At the end of the day, financial literacy isn't about avoiding every financial product. It's about understanding how each one works. And once I learned that, I stopped seeing credit cards as something to fear. I started seeing them for what they really are, a tool. Something that can either help you or hurt you depending on how you use it. So if you grew up hearing that credit cards are evil, you're definitely not alone. Many of us did. But instead of accepting that belief at face value, take some time to learn how credit works, how interest works, how credit scores are built, and how responsible credit card use fits into your overall financial picture. Your parents were probably trying to protect you with the knowledge they had. Now it's our responsibility to build on that knowledge, learn how the system works, and make informed financial decisions for ourselves. That's the real goal. Not blindly following old advice or blindly trusting new advice, but understanding enough to make smart choices. If this video changed the way you think about credit cards, or if you also grew up hearing the same advice, let me know in the comments. I'd love to hear your experience, especially if you grew up in an Asian household where money conversations looked similar. If you found this video helpful, don't forget to like and subscribe, and share it with someone who still thinks every credit card is automatically bad. It might just change the way they think about money. Alright, that's all for today. See you in the next video.